I love some of the details you have in this. You talk to individual brokers. They're getting up at 2 a.m. and notably, also Google searches are going through the roof for this.
Exactly. Google searches are up about 54%. Consumers are really getting aware that the mortgage rates are dropping, and as a result, seem to be doing some research. So that is indicative that maybe there is more of this refi wave to come.
There's more of it to come, but banks are not necessarily partaking in the spoils because they've been kind of in and out of the refi business for a while now. Who are the big players?
Right. So there, banks are still in the space. The Wells Fargo, Bank of America, they do have very active consumer mortgage businesses. However, with rates rising the past couple of years, generally, they've been kind of trimming a little bit. There's just less business, and it takes them a little bit of time to get back into the space. You don't want to hire all these people to deal with new loans if you're just going to have to lay them off again. If rates start creeping up again, and that's what is kind of making this thing happen, where brokers are working 16-hour days. These are the independent guys. They can move a little quicker, be a little bit more nimble, and they say that they are getting emails all the time.
But even they are suffering backlogs. It's taking a long time to get these refinancing through. Also, is now the right time? We keep talking about the Federal Reserve maybe being pushed to cut rates further. Could we see the mortgage rates fall even more?
That's a very good question, and something that definitely people in the mortgage industry are looking at very closely. They usually watch the 10-year Treasury to kind of figure out what mortgages are going to do. Even though most mortgages are 30 years, typically you don't always stay in your home that long. And so it really depends. We've had a lot of negative economic news, and mortgages are a bit of an odd beast in that negative economic news makes it better for homeowners because they can get those lower rates.
I know we're talking about the 30-year fixed rate mortgage going down to like 3.75%, but is there any demand for the adjustable rate mortgages?
Adjustable rate mortgages are still definitely a very small part of the market. It's been, maybe call it 6 to 7%. It's really kind of an edge case. So 30-year fixed, even a little shorter, 15-year fixed is still very much what people are looking at to buy these days. And, it's a good time to refinance for some people in the market.
But it hurts those who suck up mortgage loans, right? CLO, securitized debt?
Yes. So if you are an MBS investor, that means that your prepayment rates are speeding up. And that can be a problem if you buy bonds, for example, at more than 100 cents on the dollar. That bond pays down faster than you expect. Then suddenly you are left nursing a little bit of a loss. So, what's good for consumers is not always good for investors.
Claire Boston, thank you so much. Claire Boston with the latest on mortgage refis. Now, Claire had mentioned that Google searches on refis is one way that we're noticing there's a lot of demand for refinancings. Well, alternative data is something that's really picked up, and you can see it in the loan application market as well. If you want to qualify for a mortgage or a credit card, you've got to have a credit history.
Yeah,
but now,
which I hugely lack.
And you've seen this firsthand. So now we're seeing how lenders are looking at alternative sources of data to kind of figure out whether someone is credit worthy.
And not all of them seem that fair, potentially.
Right, because some of the questions include, are you paying your rent? Are you paying your cell phone bill? Where you went to college? Whether you graduated and got a bachelor's degree or something higher. And of course, this is all to serve a market where there are a lot of underserved people who want to get a credit card or who want to get a mortgage and can't.
And it sort of basically amplifies the inequality, right? Because there we have it. % of Americans went to college are far more Asian and white. They're not Hispanic. They're not African American, and they're the people who need to have credit at the moment.
Yeah, it's a question that policymakers are addressing right now.